Sorry, guys, I was muted this entire time. How is everyone doing? I just did a whole spiel and realized I was muted. See, I always have to double check, and I always forget to double check my setup. How are we doing today? Well, I appreciate you guys joining today. I was planning on doing a video if I had time this weekend, regardless. So I figured why not just ask if you guys are available now or the weekend. Doesn't really matter. So, anyways, if you guys are alive and well and here, please like, subscribe, share. For those who don't know, you can actually find us on other different social media platforms and as well as Substack, things like that. If you guys need the links to it, you can actually scan this QR code right next to me and you'll find everything that you need. It's pretty cool. Try it out. It's a New York cityscape, except built into a QR code. It's pretty cool. Anyways, so today, what I'm going to do is I'm going to discuss the weekly recap, what we saw the past couple of weeks, and basically go over what we provided within our community, and then do a little prep for the short to near term. Okay. You guys also know that I recently started another portfolio. This isn't my actual long-term portfolio, but it's just a new one I kind of figured to try a challenge on, starting with 100K, but strictly on shares, no option trading on it. And so far, it's been doing pretty well. As of today's close, the account is up about 6.5%, so 6,500 bucks, since I started it last Monday. And the timing of starting it was actually perfect because I pretty much bought the bottom on the entire market last Monday, and I started building positions on different things ever since Monday's open. So what we'll do is I'm going to kind of go over the indices, NQ, SPX, things like that, and then we'll kind of open the floor for any questions, and I'll also dive into some other names that I want to look at, and also things that I've shared within the community. So first things first, let's talk about NQ. Okay. What's important about NQ is last Sunday or Saturday when I gave you guys the weekly plan, uh, I had mentioned that the sell isn't done yet. Okay. And it wasn't. On Monday, we gapped down and NQ dumped another 1,000 points from Friday's close. Okay. So the sell as of then was not done. After Monday, I provided you guys a bullish bias pretty much every single day of the week into this week as well. Okay, last Tuesday is I think when we started it, and I told you guys that it's bullish. We're just bullish today. There's no reason to be bearish. All right. Once we got into Thursday, okay, we got into this acceptance area. You guys know my key pivots of 407 and 378.50. This was the weekly downside pivot for the week, for last week, and I told you guys that this would be a key area that the participants would need to hold. And as of Thursday's price action, it looks like they're trying to find acceptance above these two levels here. Okay, this is bullish consolidation in my opinion. Participants are trying to find acceptance above this 378 407 range, and if so, by close, 476.50 will reopen 626 tomorrow. Okay, that was written on Thursday afternoon. We actually saw the move right into Friday. We actually saw it in pre-market already, but we saw the move into 626 in pre-market, and we saw it again once this 476 held once again on Friday. Okay, and then we kind of just consolidated right at this weekly upside pivot at the 626 level. All right, everyone understand that? So regardless of my thoughts on a macro level, especially when we're considering the fractal analysis, because a lot of people are asking me for updates, right? And so far it has been playing out exactly as I expected, and we've been able to spot the reversal extremely fast within 24 hours of the low being hit. Okay, will there be a potential deviation like I've discussed the past few months? Yes, there possibly will be in terms of the specific path that it's been taking. And so far, we may have already started to see that deviation with this recent bounce from the lows. All right. But regardless of that, that doesn't mean I come in every day expecting to short the market on a daily basis. Okay. It's very important to be able to spot shifts in trend, regardless of what your understanding of the macro analysis is, because that's less important than what you're looking at it day to day, especially when you're mostly day trading and swing trading on short term, right? But understanding the macro will help you kind of zoom into the chart and help you find those areas of interest when you are going to play the same direction as the original macro analysis again. All right. So going from there, from the time of this acceptance level, okay, all the way into this week, we have now traded over 1,000 points above this range. All right. Now, coming into every day the past week, obviously this is a rally that the velocity of it, I'm going to be honest, the velocity of it is not something that I expected. You know, I gave you guys multiple targets to be expected on a daily basis. It just, the velocity of it and the trajectory that this took wasn't something I expected. This large of a squeeze, okay? But the analysis was the same. Now, the other thing in regards to trading RTH lately is that it's become a little more difficult to find entries during the RTH session, because a lot of the moves, especially this past week with data, we've been able to gap up on data, and we continue that move without really any pullbacks. Okay, so it's been a little more difficult to find a good entry where you're comfortable with the RR. I should phrase it that way, because when you're looking at it and we're gapping up, you know, 1%, 1.5%, whatever the case may be, the higher we go, the lower the RR is on longs, correct? Regardless of like what you can expect out of the squeeze. So most of the times I've either been trying to scalp shorts, or I kind of just wait to see if there's any other opportunity. We did pretty well this week. But I kind of wish when I spotted that reversal and the price acceptance here, that I just kind of swung Qs or swung SPX. Make my life a lot easier, right? Than waiting until the next day and kind of day trading it. But regardless, so this is essentially what happened. Ever since I gave you guys this area here and I told you guys we're bullish, we are now trading over 1,000 points higher. Okay, and then we can actually zoom into, what was this, Wednesday? Yeah, Wednesday. This played out perfectly. I mean, this has to be like one of the cleanest tests we've had. And I think my mouse just died. Give me 1 second. Yes, my mouse just died. Okay, cool. So this had to be one of the cleanest rejections of my levels. And Wednesday was what? CPI, I believe. I believe it was CPI. I forget. On the data release, right at open, we rejected the 173.25 level. I told you guys in the daily thoughts that I would expect 173.25 and 202.50 to be tested. We got the rejection of 173.25 with only a couple points above. We dropped 200 points, about 250 points from there. Okay. That bounce provided a move all the way back up to 202.50, in which we rejected to the tick. Actually, sorry, 1 point above the level, and saw another pullback of 200 points. Okay. If you had just focused on these two levels and just waited, which I did, I waited for a short here. I also shorted this, but I waited for a short here. Unfortunately, my short was set 1 point too high. It was at 204.25. So I was actually front run by 3 ticks. Very unfortunate. But this is really all you needed. Forget about playing the bounce. You just need these 2 rejections and you're done for the day. Okay. Now, going into the rest of the afternoon, this was extremely choppy. If you didn't catch this entire session in the morning and you try to trading this, you're either taking 10-point scalps, 10, 20-point scalps, or you're getting wrecked trying to trade the chop, expecting a breakout or a breakdown. All right. And we've been kind of seeing this a lot as well. When we start getting these large directional moves this past week, actually, the market has pretty much been providing a large one directional move, and then it chops for an hour before it does another leg. Right? And it hasn't really been the most fun. Okay. And then we gap up again on Thursday. All right. Thursday was jobs data. Okay. Really good reports, extremely bullish. We gapped up and we just continued to run throughout the day. And it was extremely hard to find an entry to kind of go long on and stay long. Right. Of course, looking at it from a trend perspective, really just buy the dips on EMAs. But even then, the action was so slow that you would really just have to have some conviction to hold your longs and kind of just walk away until the targets hit, right? Or your stop hits, whatever the case may be. So this was, I mean, just look at the candles, the candle structures on Thursday. First hour was great. And then everything else in between on this slow grind up, it's just not the most favorable. All right. Especially when you're trying to trade momentum. Momentum is key. Okay. And then now we come into today on Friday. So it was a pretty decent day. I provided you guys with a plan early on in pre-market, basically saying that we would pull back, which we did. Unfortunately, that whole move of the pullback happened pretty much during pre-market. So the pullbacks were pretty limited in the RTH session. And if you guys remember when we were on stream today and we were just watching this price action right here, this was hideous, man. I mean, it was absolutely hideous. The levels worked so well, but the range was just so unfavorable. Okay, so we'll take a look at it from my actual chart with the levels on. Where were we? Here. This is the RTH open right here. Right. I mean, just look at this range. You know, the levels were working extremely well. 48125 printed multiple times. You could have shorted 5, 10, 50. Like these two levels within this range worked extremely well, but it just wasn't fun, right? And it felt like a grind trading this today. You know, I started the day red, had to grind my way back to green. It just wasn't that favorable. But we kind of expected that to happen, being that it was OPEX, right? But going back to this, so I provide you guys data on this in regards to the initial balance, aka IB. Okay. Give me 1 second. Let me find my post and I'll paste the image here. Where is the image? Where's the image? What? Where's the image? Oh, it's not letting me post the image for some reason. It's odd. Anyways, I provide you guys data today in regards to the initial balance on NQ, where 79% of the time there's only a single break. Which means the initial balance is from 9:30 to 10:30 a.m. Okay, if you're not familiar with the term. Initial balance is 9:30 to 10:30 a.m., which is essentially this hourly candle. All right. We were trading in an hourly inside candle for a good hour and a half or so. And it was disgusting to watch. Okay. We were watching it the whole time we were on stream. And I provide you guys that data around what time? Like probably 11 o'clock when we were still on stream, 10 or 11 o'clock. And I had mentioned that 79% of the time, NQ does what a single break of the initial balance. So if this is your initial balance, it does a single break like this. Sorry, does a single break like that, or it does a single break like that. Okay. So what that means is that rarely, well, 21% of the time, it'll do a double break, which means it'll break the high. Actually, I'm going to start here. It'll break this high out of the initial balance and then break back within, and then do a double break to the downside. Or vice versa, it breaks the IB to the downside, reclaims it, and breaks it to the upside. Okay, that's what I was referring to when we're talking about the IB, the initial balance, and the probability in regards to historical data. You guys all understand that? Okay. Now, this is basically what happened. If you guys have remembered my previous lessons on inside candles, It's also on YouTube. You can apply this concept to any time frame. So I had mentioned very early on that we were trading in an hourly inside. And until this breaks, it's probably best to just not do anything. All right. And we have the key level here, 616.25. Okay. This was our pivot. All right. The 616.25. Okay. So later on in the day, we got into SPX calls, the 55.75 calls. That was based on this break. So if you're telling me that 79% of the time NQ has a single break out of their initial balance, which means it will continue in that direction, then I'm willing to take chances on SPX calls at the same time, right? It's the same way I long NQ when I take SPX calls, I short NQ when I take SPX puts. It's the same concept. So the moment we started breaking above it, that's when we took SPX calls, which we were able to close out for 100%. All right. Once we got over this break, we saw 616. I'll zoom into small time frames now. We saw 616.25. Had a couple of rejections here, a little choppiness before they break the level. You guys remember 616.25 is a huge level. Okay. And from there, we continue to pop another 50 points off the level. All right. So again, now you guys will see how providing you guys that data today allowed us to kind of just play the break, right? Because you're telling me that there's a 79% chance that there's only a single break, which means once we break out of this inside hourly candle and this initial balance, then we're going to continue higher, right? Because the truth is, had we not broken this, and let's just say we kind of went back into this, okay? This entire higher zone is pretty distributive, right? The fact that we even rejected this, rather than just breaking it and then doing a bullish retest, is pretty bearish in itself. And it, in fact, did play out, okay? The fact that we rejected this, we pulled back near the opening range. Cool? You guys all understand this? And although we couldn't continue this, right? We had some confluence with our levels here, and you'll see the fibs here as well. You'll see some confluence with the fibs lining up with our 496. This was tested twice, bounced twice right off this 496 level, and then we sent it higher. Okay, and then that's when we started getting back into the zone that I drew out for you guys earlier this morning, that we needed to watch for a break. And you'll notice the zone is exactly where we rejected twice this morning before pulling back and then breaking it once again. And this is very similar to what I've always discussed with liquidity hunt and structural breaks. If we reject an area and we reclaim it, what do you guys expect it to do? You expect it to continue in that direction, correct? So same thing. So if we're looking at, let me use a clean chart, okay? So if we're looking at, let's say, a bear flag here, and we break the bear flag, and then we reclaim it. Well, the assumption can be made that it's going to continue in that direction, okay? So same thing with any, even a horizontal structure. It doesn't really matter what it is. The whole point is, if we get a break above and we get a little peekaboo and we break back below, this is what you're likely going to expect, okay? This is just how structures work, and liquidity hunts and stop hunts and things like that. Same thing if we're looking at it from the downside, all right? Just a horizontal structure. We break down, reclaim it, we're going to send higher. It's very similar to Wyckoff's accumulation and distribution cycles, right? It's very similar, okay? You get the spring, which is essentially that stop hunt. All right. Cool. Now, What else can I continue with? So far, I drew out this box earlier when I was looking at the chart. The reason why I drew out this box is I'm expecting them to kind of chop this around and build a range here. Okay, for the next week, or at least the next couple days or so. And from there, we see if they can continue this run higher. All right, the 612 area is going to be pretty key. And if we can hold above this, we're going to see 766 again. You guys know 766 is a key trend shift level. You guys have the list of key trend shift levels, so you guys shouldn't forget these things. Honestly, these should be memorized by now. Okay, we've been trading within this 18 to 20K range for like 4 months. So the levels have not changed at all. The only times they defer is when we roll over contracts a bit, but other than that, it still doesn't change. Okay, so is that CMB? Yes, because you'll see that the trajectory of this move is essentially the same trajectory of this move, right? The imbalance left behind, which is also why we're kind of seeing the velocity that we are now this past week. I mean, we've popped what, over 1,000 points in just 3 days, right? So we're essentially filling the same exact imbalance here to the upside. All right. What else? So now you can see that this area is going to be pretty key for us to break and continue higher. There is definitely a possibility that we actually might get back to 20K again pretty soon. And I probably expect that run to last until the end of this month. And seasonally, September is literally the worst month of the year. And probably expecting the same thing again this year. But we're going to have to watch this area here. I do kind of expect them to start building a range up here. Whether or not it becomes a more of a distribution profile, we'll have to wait and see. I do think there's a chance that they pop this above to 766 and then they peekaboo it back down. That's kind of what I'm just like hypothetically analyzing at the moment. Okay, because that 766 level is huge. It's a major level. We use that as a trigger for downside, for further downside as well, if you guys remember. So even from 766, we dropped 2,000 points from that level, that trigger level. All right. So this is what I'm looking at for NQ. Do you guys have any questions about that so far? For NQ? All this makes sense, guys? Oh, nice. We have 19 people watching on a Friday night. That's pretty cool. Oops. Script a little water. You guys have any questions? No? Cool. Now, in regards to SPX, pretty similar analysis with NQ. Nothing really changes. 5564326 is a pretty major level, so we need to break back above this. This is likely going to be the weekly upside pivot for next week. So once we get above this, you can probably expect the 5600 level to get tested again. All right, but like I said, I think there's a possibility that they're going to range this a bit and more likely print a more distributive profile to retest some of the lower levels before sending it higher. All right, that's kind of my expectation right now. I have to look at the calendar to kind of see if we have any important data next week. I don't think we do, but this is essentially what we're looking at the moment. You know, we've had some pretty good volatility lately. The only downside of it is that the volatility hasn't really been present during the RTH session. You know, it's just, that's the unfortunate part of it. All right. So next week we have jobless claims, we have PMI, we have FOMC minutes. Oh, we have Jackson Hole. Okay, that's going to be an interesting one. So Jackson Hole is next Friday. Yeah, based on the economic calendar, we don't really have a data heavy week, to be honest with you guys. I think we kind of got all the data heavy days out of from last week or this past week. So, but Jackson Hole is typically a huge day for the markets. So we'll have to see what happens with J Pound that day. But aside from that, that's pretty much it for the indices. All right. Now, gold. We nailed gold. We had a lot of great opportunities this week that we took. BA, we caught a massive move. Jesus, guys. We caught calls on 170 calls the day before it started running. We took the swings on Wednesday, we closed it on Thursday, and it's been running ever since. You know, when it's funny because when Thursday happened and we gapped up on data, I pretty much had this idea of a pullback happening and a gap fill happening from data, right? Which is basically part of the reason why I kind of took profits on BA and Affirm so early on in the day. All right. We hit like 71% on BA. I think it was like what, 30% on Affirm. I forget what it was. But what I was watching was pretty much this entire move, which is basically, Zeno, what you were saying earlier, the CMB, right? You'll notice the trajectory of this downside move is the same trajectory that we're getting up here on this bounce. Okay. September is just seasonally the worst month of the year. Every year. In regards to SPX 5446, are you still expecting a rejection of it? We're trading 100 points above 5446. So 5519 and 5488.50 are going to be your current supports, major supports that you need to watch out for. So if we're able to get a retest of these, a bullish retest, and bounce off these levels, there's a pretty good chance that we're going to retest all-time high. All right. Any breaks back below this 5488 is going to reopen the entire range down again. So this is going to be a pivotal level to watch out for, as we have been all year anyway. All right. So BA was one, Affirm was another. We caught a very nice move on Affirm. Same thing. We took it Wednesday. We took next week contracts. We sold it the next day. I'm not too mad about it, only because I have Affirm shares at the moment that I picked up earlier this week after this dip. So that's pretty much the recast for those. Aside from that, we took SPX on a daily basis. I've been scalping heavier sizing, which is why the percentage profits haven't been as high as we normally get on SPX. But which is fine, because in terms of portfolio growth on a daily basis, it's actually been higher anyway. So I really don't mind it. It's kind of a payoff, you know. Now, in terms of other names that I wanted to look at. So in regards to that portfolio that I started, you guys know I threw 100K into a port to kind of grow it solely based on shares. Okay, I'm not doing any options on it. I may just do leaps, but there's no short-term or mid-term options being taken on it. If there's good opportunities that I see in leaps, like for at least 6 to 12 months out, then I'll probably take it there. But aside from that, it's really just shares. So I bought the dip pretty much on a lot of things. Snow, I bought the dip on Snow at 112. The contracts, I mean, the shares are up like 13% at the moment. Baba, I bought at 74, I believe. 74, 76. I have to look at my average. That's printing right now. I bought Yin yesterday. Yin already gapped up 6% today. I picked up GOVX today. So GOVX, this is an interesting one. I shared GOVX with you guys yesterday in market chat. I just shared a screenshot of it, the chart, because this was a very interesting chart to me. And I wanted to pick up shares yesterday, and I just completely forgot by end of the day. Now, the reason why I picked this up and why I wanted to pick this up is because this is a monkeypox play. Okay? I probably should have mentioned monkeypox when I shared the screenshot yesterday, but this is the reason why I shared that chart. Okay? Lo and behold, I just ended up market buying it today at like 5.50. My average is $5.50. I hit 50% on it within like an hour and a half, and I trimmed like half of my position already. So it was a great play on shares. They don't have options on this, but I'm kind of leaving half of my position just to see if this can run above 888, which is essentially this range here. Where is my drawing? Above 888, I expect this to run pretty hard. Okay? Especially if this monkeypox thing becomes a huge global issue. Now, in regards to monkeypox itself, I'm not worried about it. I'm not expecting a pandemic. The way that it gets spread, it's pretty much an STD. Okay, so unless you're coming into intimate contact with someone who has monkeypox, or you're touching something that's contaminated with monkeypox by that person, I probably wouldn't worry about it too much. All right. Um, However, this is still going to become a big issue. I know someone who caught monkeypox like when the cases first came out. And I actually believe he was the first case in Massachusetts, by the way, when the headlines hit. Uh, and I've seen pictures. It's not pretty. I would much rather catch COVID than catch monkeypox. I'm not even kidding. Like it's bad. Okay. Uh, you're getting like boils. It's pretty much chickenpox on steroids. Okay, but except you're getting boils. You're getting on your hands. You're getting on your genitals. It's a terrible sight to see. Plus all the other symptoms. You get fevers and all that. Whatever. All right. So this was a monkeypox play. It's such a great win today. Port is up like 6.5% by end of the day today within 2 weeks. All right, so I'm up 6,500%. Sorry, $6,500 on the portfolio, strictly playing shares the past 2 weeks, which is pretty amazing. Okay, so I bought that. What else did I buy? Shit. I bought a lot of different. Oh, I bought BITO. Pretty much playing the bounce on crypto. Shit. What else did I buy? I have to look at the list. Pretty much everything is green that I bought except GDRX. That is the only trade that I am red on. Hood, I bought Hood. I bought Hood at I think 17 something, 17 and a half. It's printing right now. PayPal I recently picked up. I also another great winner. I got this at like 64. Square I just picked up as well at 64. SLV. You guys know I've been watching SLV for a while, and I finally decided to just pick up shares on it. I've been pretty bullish on metals since the end of last year, where I gave you guys the bottom on that. And then we have Affirm shares, which I'm also up like 13% on. So recently, like today and yesterday, I kind of just picked up. Oh, NVAX. Let's talk about NVAX because this is a chart that I really like right now. So with NVAX, the chart looks amazing. Okay, this is a type of bottomed out shit stock that can really squeeze when the time comes. Okay, you're getting the same type of bottoming structure that we got here, and we finally got the breakout and the trend shift. All the MAs have flipped. Price is now trading all over the MAs, and we're essentially seeing the same thing here. Okay. Right? It's almost like a mirror image. Okay, you get your initial low put in here, right? And then you get your lower lows here. It's a mirror image. Look at the volume pop that we got. And this was when all the small caps started squeezing again earlier this year. Look at the volume pop that we got. Okay? Look at this. Where are we? We're pretty much here in the same structure right now. You guys seeing this? Okay. So this is why I like Novavax. You can also see the volume down here within this range. Okay. This straight up looks like accumulation to me. Same way I gave you guys Carvana when it was like 15 bucks. Same exact thing. Okay. And this is the types of bottoms that I like to buy. If I spot a bottom like this, it's pretty much high conviction. I just picked up a bunch of shares today for NVAX, and then we took a lotto swing for next week, right? But this is the type of bottoming structure that I like to see. Now, if they have news, headlines to kind of fuel the trajectory of this move, so be it. right? We got monkeypox going on. They come out with a monkeypox vaccine, whatever the case may be. We have another. Jordan just shared a headline about another virus that's going on now. I forgot what it's called. I look at the chat. Let me see. What was that called? Oropochi virus or Pouchy virus, whatever it is. Anyways, CDC is like discussing that now. Okay, there's like over 8,000 cases from the start of this year. You know, a couple deaths. I think Europe is starting to see a lot more cases of that or whatever it is. Yeah, you know how it goes. But regardless, like I think regardless of the headlines, there's no fear that we're gonna see 2020 again, where we get lockdowns and pandemics and all that, and the whole world shuts down. I don't think we're seeing that again for a very long time. However, it's going to be a nice kind of FA meets TA play on health names and vaccine names. So, Novavax is one. I really, really like the structure. It's bull flagging. Okay, it's literally bull flagging off this recent rally, and it's holding this entire support here, this entire range. I like it. All right, I think what I'm going to do is probably look for some longer data swings rather than just those lotto weeklies that we took. But take some longer swings. This can easily go back above 20 again, easily. All right, so on that note, I want to take a look at Moderna. Moderna does not look terrible either. All right, if we can reclaim and actually hold above 87, this is going to take some time to structure out before bouncing back towards 90 and 100. All right, but this isn't ready yet, in my opinion, but it will be soon. Let the structure out a bit first. So going back to the China names. PDD. You guys already know my thoughts on PDD. I am pretty bullish on PDD. I shared you guys my projected path on this. Very simple. This is the same type of structure that we saw on NQ as well. Okay? You get your higher highs and higher lows. When you see a structure like this, okay, this is setting up for a massive breakout. All right? We saw this on NQ. Remember the other day that we were streaming? I think it might have been last week that we were streaming. We literally saw this same structure on NQ. NQ saw a quick sweep of it first, and then it popped to new highs. All right? You guys remember that? Cool. Now, PDD, if we continue this, I expect all-time high to be broken, and I have some targets up here into 300. I really like PDD. In regards to China names, Baba and PDD are the strongest ones to always look at. Baidu is trash. It used to be great to trade, but this chart, man, this is disgusting. Like, honestly, this is disgusting. I mean, look, we are sitting at support, but this isn't even getting the same type of strength that we're seeing on Baba, which is crazy to say, because Baba has looked like crap all year too, right? But Baba has been holding our levels extremely well. Our key pivots here that we've been using on Baba all year long has been holding the entire year. And every time we catch rotations on China names, we've done it extremely well. We literally caught this entire rally on China. And we caught the bottom on this too. The time we took this rotation on Baba, we took Futu, Baba, Yin, FXI, KWeb, all at the same time. We literally bought and long the entire China market. Okay? So we tried it again recently, but I think we were a little too early on that. Right? We've caught this rotation like, I don't know, probably 3 or 4 times. I just know that we've been destroying China this year. Honestly, we have such a high hit rate with it. This time, there's a reason why I started picking up China shares as well. I think this next rotation is going to be the last one. The next leg that China has to the upside is going to be the one where Baba reclaims 100 and higher. I have relatively high conviction on that as of today. Okay, so I'm going to start planning out trades again with Baba and all the China names. And again, I'm going to show you all those tickers that we discussed. Where is it? Not on this charts. Here. KWeb. Okay. The last time we took it was, I think, here or here, right? And I labeled this entire thing for you guys. The soft stop loss where it gets invalidated, and then the major target. We played this entire thing. I kept it on here. I never deleted this. So the same thing still applies. If you look at this, we're still trading above this bull flag. We didn't get the full retest of it, but we're still trading above this bull flag. We swept the lows and the invalidation box, and now we're trading above this soft, stop loss area. We get back above this 27.18 and we flip here. This is what I'm looking at. Okay? This is what I'm targeting for KWeb. All right? Now, same thing with FXI. I did the exact same thing. Okay? And again, we pretty much have bull flag forming here. Right? We fill every single gap from the rally a few months ago. All right? So again, this 26.13 is a major level. If we can hold above this and flip, we're going to run. All right? There's confluence everywhere right now. So, again, with BABA, same thing. 73.28, this level and 71.40 have been the two levels that I have been pounding into you guys all year long anytime we trade BABA. These are the major levels that we have been watching. I think I actually have a couple more. But these are the major levels that we've been watching all year long. All right? And it's been holding so well. I don't think people realize the strength that comes every time it tests this 71.40 level. And the fact that they still haven't broken this down. And yes, BABA is very shitty to hold as an investor. And it's very shitty to trade most of the time. Unless you're catching the moves before they happen. Right? Which we have been this year. But on a macro level, the strength that it has every time it gets down into the zone is very indicative of a new cycle to come on China names. Okay? I don't care how much hate you have for China names. This is my conviction with China. And this is my conviction with BABA. All right? So, the shares, I don't plan on taking profit anytime soon, although I do want to start focusing on some swings for the China names again. Same thing with Futu, all right? So, Futu, we played this entire thing up. Futu printed for us like 5 times this year. I don't even know how many times we took Futu. We took Futu, played this entire rally. Now it pulled back the entire move. Bounced right off the zone once again. And now it's trying to break back above the structure. So, same thing with this. Once it breaks back above, at least this pennant structure again. If we can get a bullish retest, this is it. I genuinely think that this next rotation for China names, this next rally for China names is going to be the last one. And by last one, I mean you're not going to see sub 80 on BABA for quite some time. I genuinely think that. Okay? Yes, China economy kind of sucks, blah, blah, blah. BABA is still killing earnings. Dude, they have like $2 billion in cash. $2 billion in cash. They just beat their Alibaba Cloud revenue, and the estimates all just beat in their latest ER. Everything is looking good. Okay? So I think China names right now are just sleeping giants, and I think when the time comes again, when people aren't watching them, that's when we're going to rally. Because the time when we took China names, I told you guys, there has not been a single mention of China swings or China stocks on Twitter for weeks when we took it. And that was a major sentiment read for me. Not a single person mentioned BABA, saying that BABA looked good, or Yin, or KWeb, or FXI. No one talked about China names. No one gave a shit during that time. And that's what helped me find confluence in that entire China rally. And we fucking nailed it. So, I'm ready to do it again. And this time, I'm going to be aiming higher than just what we saw in the last cycle. Okay? You guys all got that for China names? That's what I kind of wanted to go over with China. A lot of these old watch list names have been playing out extremely well. So Zillow, I bought Zillow shares too. This was a massive play that I provided you guys a few weeks ago on the weekly watch list. We basically added it down here, and we saw a massive move that same week on Zillow. I do like Zillow. Okay, they broke this down again and reclaimed it with insane strength on ER. That's bullish. I don't care how you look at it. That's fucking bullish. All right. So they're starting to build a pretty good balance here. and your first major target for Zillow is 65.70. All right, so that's essentially where I'll probably trim my first shares, just about like 20% or so. Okay, and then above that, you're gonna start seeing a new cycle play out. All right, pretty much essentially like this, something like that. Okay, what else is there? Trying to think. You guys have anything? Oh, Neo. Yes, I picked up Neo shares too. And I took Neo leaps today. I do like Neo still. I think Neo's a sleeping giant as well. And of course, if the whole China sector runs, Neo's going to run with it. All right. I think it looks bullish. Yes. Are we still below trend? Are we still trending down? Yes. There's no arguing with that. I mean, even if we invert the chart, it's pretty obvious, right? But I think this is a potential double bottom that we're seeing here. I don't think we're going to break this all-time low. And I think this is actually going to start structuring out a little bit more like this. Potentially do one more sweep. And then we start reclaiming this area. And this is probably going to go parabolic. Honestly. I'm kind of expecting Neo to go parabolic by... Honestly, probably by Q1 of next year. Or even by end of year. So we took 5 calls for January. Even if it doesn't go parabolic by January, I 100% expect to see over 5 by probably October or November. Okay? But this is kind of what I'm expecting on Neo, which is why I kind of slammed shares recently too. So, drawdown, look, we're closer to a bottom than we are to a top for Neo. And with my analysis and sentiment on China names, there's no reason why Neo wouldn't run with it. Okay. Same thing with Lee. I'm kind of watching Lee as well. It broke this entire structure down and faked this entire move on the last China rally, and pretty much has given back a whole 2 years of gains. It's starting to bottom out a little bit more down here, so definitely something to keep an eye on. They have ER coming up on a couple weeks or next week. Next week. So something to watch out for. Structurally looks pretty good. This is a pretty good rounding bottoming structure. So I may pick up some swings on this as well. To in conjunction with like Neo and Bob and all those. Any questions about China names? Now, in regards to SVIX, I shared you guys SVIX, okay? This is short VIX futures. All right, it's essentially shorting VIX. So, we talked about VIX before. I gave you guys a warning on VIX very, very early on. We're now trading back under, way under, and we're now about to test this key zone here on SVIX. This could be a potential bearish retest of it. So if this happens and it rejects, you should expect volatility to come back again. You get a bounce on VIX, and you get pullbacks on the market. Very simple, okay? This is why I shared this chart. All right? You can also kind of, obviously add another trend line here just to showcase the break here. All right, you want to talk about PayPal? Sure. PayPal looks great. I think bottom is in on PayPal. I've been saying bottom is in on PayPal throughout this entire range. Like, I really like it. I don't see any reason why PayPal doesn't get a nice new bull cycle. They're still in a lot of debt. Fundamentally speaking, they're still in a lot of debt, but technically, the chart looks great. I mean, it looks great. I think it's lagging behind. Same thing with Square. I think both of them are lagging behind. Square got another sweep, held my 5601 level, and is now reclaiming this structure again. And very similarly to the other names I've shown you, like Futu, I'm expecting kind of like this type of move. Okay. So, all that's here. All right. And people will say that this is an inverse head and shoulders, even though it's not really an inverse head and shoulders. But I guarantee you, someone on Twitter is going to say this is an inverse head and shoulders. Guarantee it. All right. Docu. Yes, I also picked up Docu shares. I like Docu a lot as well. This is pretty much kind of bull flagging out of this range. It's taking some time. But again, you'll notice that structurally speaking, these bottoming structures are very, very similar to every bottoming structure I've given you since the end of 2023 or the end of 2022. Okay? Every bottom that we found on the market looks something like this. Every single one. And all of them have printed. This is the type of structure that I like to look for. Even though this takes a lot more time, I mean, look, Docu's been trading in this range for 2 years now. Literally 2 years. Okay? Hasn't moved the muscle. All right? But the chart looks good. I don't see any reason why I wouldn't long this, aside from time spent in this range. Okay? But the more time being spent in a range, the higher the velocity of the breakout and the further it goes. Okay? This is where time comes into play on breakouts. T-Doc, I don't really... Okay, so this is one of the names where I actually don't care for. T-Doc just looks terrible. And the reason why I say this is because, like, this is more so of a COVID play than any other company out there. Like, you know, Zoom and Docu. Because people actually still use DocuSign, right? Signing documents virtually. That's something that's never going to become obsolete now. Zoom, same thing. Everyone still uses Zoom. Yes, people are now returning to the office. Some companies require you to come back a few days a week. But major tech companies are pretty much all remote work now, for the most part. And Zoom is still something that people use. Of course, they have competitors like Teams, Microsoft Teams, and Google Meet, right? But it's a great platform to use. And I mean, every time we stream, we use Zoom as well. Okay, so as a user, I like Zoom. But the whole point I'm trying to get to in terms of T-Doc is the fact that it's very hard to use telehealth services. Because most of the time, you have to go in and get examined. You can only do so much over a virtual call. You can give your symptoms, but it's almost like going on Google and searching your symptoms just to find out that it could be hundreds of different diagnoses, right? So T-Doc is one name that I would never touch. I don't really care about it. I don't even care if it pops from here. It's just I don't have faith in the whole logical aspect of telehealth as a big solution to everything. Because if you're sick, like for example, when I caught pneumonia a couple weeks ago, there's no way a telehealth service would fucking help me diagnose that. Right? There's no way. So I could tell them my symptoms. Hey, I have a cough. Or, oh, I'm running a fever that's like 104 multiple times a day for the past 4 days already. Well, what do you think they're going to do? They're going to tell me to come in and get examined. That's the only way they're going to find out what the hell it is. Right? So, this is just a good example. You know, I don't really care for T-Doc personally, fundamentally speaking, which is why I would never be long on this company. Was this a great name to long during COVID? Of course. Obvious reasons. You could barely see a freaking doctor during the time. When you go to a hospital, you're limited to one per person, right? Like, this made it very easy. You're on lockdown. What do? Well, you just virtually call a doctor and kind of talk to them and consult. Okay? But aside from that, like, I would... there's no reason to long this chart. Absolutely no reason to long this chart. Just look at it. You wouldn't just be catching knives. You would be catching every single weapon in the world if you try to long this right now. It's just slow bleed. And even then, the volume is still increasing on the way down. So, I don't like the chart. Nike, great question. Nike, this is something I was watching and I completely forgot about. So, we took Nike down on ER. We absolutely printed on Nike puts for ER. It was like 700, 800%, whatever it was. And I've been waiting for this to consolidate, and I completely forgot about it this past week. I like Nike. I wanted to buy shares on this too. But right now it's closer to resistance, and I kind of want to see this pull back first before doing anything else. Okay. It looks great, though. I do like Nike. Retail in general has been getting destroyed. All right, but you'll also see with the jobs report and the retail spending report, it's part of the reason why Nike has seen such strong movement too. Okay. Crowd net. Crowd. Another name that we took calls on recently and kind of fumbled the bag. We had 245 calls. Those 245s like hit like 10 bags, I think. Again, same thing with this. We're kind of closer to a resistance. About to fill this gap here in January. So we need to get back above this gap for any higher. Lots of these things are a little late to chase, in my opinion. I would rather see a structure out and then play longs again rather than chase something like this. Nets. Net looks pretty decent. I do like this, actually. You're getting your... Actually, funny thing is if I extend this out... Oh, I can't extend. If I just draw... Extend the same line out... Wow, pretty cool. Yay. Simple technical analysis. Yeah, let me just draw a level here. Whoops. So I drew this last time with the breakout to play net. I don't remember if we played this or not. But I think I did this drawing on stream. So I'm just going to draw a level here. All right. We got a bullish retest right off this range. Looks pretty good. This is pretty much setting up for another breakout. Yeah, I do like this. We would probably need to get back above this area here. This is your zone. Okay, this is your breakout zone. This is what I would expect on net. Otherwise, it looks pretty good. They have ER coming up in November. Could potentially take a couple months swings on this to play the ER run-up. But net looks pretty good. Now that we're talking about net, I'm going to go into ZS. ZS also looks pretty decent as well. All the cloud and cyber names look pretty okay. CRM potential breakout as well out of this range. Might need some more time, but I think if this can break out of this range and actually get above this area here, it's probably going to see new all-time highs. You don't like this peekaboo here. This is very clean peekaboo, and then further bearish retest off that same level, which then led to this entire downside move. Yeah, same thing with Adobe. Yeah, these names all look pretty okay, pretty decent. Yeah. On a macro level, this is setting up for a nice move. Setting up for a pretty nice move. Yep. I have a feeling someone's going to ask about SMCI, so I'm going to go into SMCI because I actually want to see what's going on. So, SMCI, I gave you guys a short on SMCI up here. We took it all the way down to like 700 or 600, whatever it was. And I told you guys this would go to 500. What was the low? We saw 479 on that Monday last week. Okay? Amazing. And then printed a weekly inverted hammer, which I missed. Printed a weekly inverted hammer, high volume. This is like a great setup to play the bounce on. You get an inverted hammer with high volume like this, you fucking long it. But unfortunately, I wasn't watching SMCI. But massive move this past week. It's up like 130 points or whatever it is, 150 points from the low. Just this past week. So really nice move so far. Could this be the bottom? Maybe. I wouldn't be so quick to call this the bottom yet. I think SMCI could still have more room to pull back. Still have a lot of overhead resistance to get through anyway. Okay, but this is very clean. This is more of a quick TA lesson for you guys. You see something like this, especially on the weekly time frame, man. You start watching for longs. Okay. Just unfortunate I didn't look at SMCI at all this past week. Airbnb. I like Airbnb. I was considering getting some shares on this as well a few days ago after they dumped on ER. I do like Airbnb as long as it holds its weekly inside breakout as a bullish retest. Okay, you guys remember I discussed this one a while back. I want to see this 113.80 hold to kind of play longs on. Realistically speaking, it doesn't look great for bulls. But if this can hold and they structure this out for a bit longer, I like it. I also want to talk about Roblox because Roblox is a name that I've been kind of talking to you guys about for a very long time. You guys remember my monthly insight video? This is the same monthly insight candle that it's still been trading in ever since I did that video. The same fucking one. Roblox has not moved at all. Okay? We got another retest of it back in May. The same exact level, 2952, and it just hasn't really done anything since. I do like Roblox. I still think Roblox is going to break out at some point. It just may take a lot longer than people expect. So I kind of want to build some positions in spot on Roblox as well. Just buy some shares. Maybe take some swings if I see that it's ready. But Roblox is literally like everyone and their mother plays Roblox, like kids. It's crazy. And people spend a lot of money on Roblox too. You know, I think you can buy coins in there or something like that. But it's definitely something to pay attention to. I've always liked Roblox in terms of a long-term investment. It's more right now. It's more of a matter of timing. That's pretty much it. All right, like here, I was wrong about this. It hasn't done anything since. It pulled back, and now it's trading at the same exact level the last time I discussed Roblox back in March. So, I would hate to hold options on this. This is almost like Baba, where it just does nothing for an eternity. If you were to play any type of options on it, you're probably just getting eaten by theta. You know. All right, so Roblox is another one. Is there anything else I wanted to discuss? Last two, AI and ArcG. AI. Okay, AI. AI, I've been watching it a little bit recently. I don't think it's ready yet. I've been waiting to see if it is ready, but it just isn't ready yet. I actually have it here easily accessible in this list. You see, these are names I kind of look at like every other day or so, just to kind of track things. These are names that I've always like prepped for setups on, major setups on. So I try to check in on them every so often. I do have a lot of names in all my watch lists, so it's very hard to go through them every single day. But yeah, AI, I don't think it's ready yet. As much as it's consolidating here, I just don't think it's ready. So I'm not even buying shares on it right now. I wanted to, but I'm not. AI and ArcG. Yeah, ArcG doesn't look bad. Needs to get back above this 2747 level. You can obviously see some really strong demand zone down here, which pretty much actually goes back all the way to December 2018. Okay. So far it still looks pretty good. I would love to see 2747 break though. Okay, we need that. We need that break. This volume though, this volume down here is something to pay attention to. Honestly, it looks like accumulation. There's some pretty heavy volume for this range. So definitely something to pay attention to. But again, the trigger is going to be 2747. We've rejected that 3 times back in July. Okay, on the weekly chart. So this is extremely key. We get back above this, I think there's a potential to start the next bull cycle on genomics. All right, but we need to get back above this. Coin, I like coin. I wanted to buy the dip last week. I didn't catch it. That was just me. I just wasn't monitoring it enough. But I wanted to catch this dip for shares. You guys know this box that I drew out based on this range from 2022 is the same range that it literally bounced off, the exact bottom of the box. Okay, this was a major dip buy. All right. However, we need to see if this is going to be a liquidity hunt that reclaims its structure. Okay, if we can't reclaim this bear flag, then we're likely going to see lower still. So for bulls, you can still play it up here, but in terms of seeing this entire range break and new all-time highs, which will happen once we can reclaim this range again, for something like this, I don't expect them to reject it again. We're going to see new all-time highs on coin. Okay, it's going to happen. It's just a matter of when, not if. All right. But yeah, right now looks pretty good for a continuation, but we need to see this area here and whether or not this is going to become a bearish retest. MCD. RW, you have a lot of requests today. Huge range on MCD. I don't normally trade MCD. I'm gonna be honest with you guys. I don't normally trade this because it moves so fucking slow. So I don't really trade it. But this is an obvious range that has been trading in for a year now. So something to pay attention to. I think the next test of this area here is gonna break and see new all-time highs. All right. That's pretty much it. Look at the volume. I mean, look at the increase in volume over time. Looks pretty bullish. I like it. Hood. I gave my assessment on Hood. I like that. I literally just bought shares at like 17.5. I like the chart. There's no reason to be bearish on this. I think there's a lot more room up into the 30s. You know, this is, I think, another case of it's not about if, it's about when. So we get back above this. Get back above this area here. They can flip it. And then we'll have some overhead resistance here, but something like that. Okay. But this is going to be a key here. Again, a lot of these names right now, it's a little difficult to say, hey, you should go long now. Okay. I typically don't like chasing rallies like this. I also don't like chasing dumps. I like to see something structure out first to provide me with, you know, a better entry on. Okay. Not only that, when you're talking about options, you chase something like this and then it ends up consolidating for a week or so, your contracts are going to get destroyed because you're literally buying the pops on IV and gamma at the same time from the recent rally the past couple of weeks. So you get in here, even if it plays out, your premium is going to be down 30 to 40 to 50% before that move happens. And then by the time that move happens, you're going to need a much bigger move to even be profitable on it. You guys understand what I'm talking about? Okay? It's the same thing when you're trading like SPX, right? You buy SPX 0DT when it's trading at high IV, and then it takes all day to finally do the move. Even though you were right the entire time, it takes all day to finally do the move because you're getting killed by IV because the price is just consolidating. You're getting killed by IV crush, and then you're getting killed by the decrease in gamma over time. Okay? So you're not capitalizing on the mechanical sides of the option contracts due to the fact that you got in way too late and you chase something. Rather than waiting for something to structure out, let everything cool off, and then play it. Cool? All right, how long have we been doing this for? I don't even know. Any questions so far about anything that we've gone through? Oh, I went over, I want to talk about Carvana. Carvana. I think Carvana is going to 200. Okay? That's all I'm going to say. I think Carvana is going to 200. This looks fucking insanely bullish, guys. Again, you see a structure like this, it's going to pop. It's getting ready for a next leg. Any type of structure that you see that's like this, assuming this. Okay? That's what I assume. Carvana looks super bullish. I gave it to you guys down here. All the way down here. Okay? It's now up 10x in the past fucking year. Insane. Probably one of the best trades. But I think it's going to 200. We still have this entire imbalance to fill. Okay? We're seeing the same, look, we're seeing the same type of choppiness in this range. The same exact range. Actually, let me extend a little bit more just to really show you guys. Same range, right? This is how you study cock and ball structures, okay? The trajectory of these moves were pretty fast, right? And then here, now we're kind of trending and chopping around the same way we did on the way down. So once we get above this, I think 200 is going to come pretty fast. All right, so I do like Carvana. Which kind of brings me to Car. Car may be ready soon. I think this crash cycle is starting to complete. It might need some more time to structure out, but this range is going to be pretty pivotal to watch out for. And this is what I'll be paying attention to. This is what I'll be paying attention to. If they can get a consolidation structure going on for a couple months here, all right, something like that, this can probably start a next bull cycle. But this is definitely a crash cycle that's playing out, and in my opinion, is almost complete. This is a straight up crash cycle playing out. All right. The other name I kind of went through earlier this in Discord today was Con Ed. So I also picked up PCG. Now that we're talking about utilities, PCG. You guys know I've been sharing PCG with you guys every now and then. I've given PCG to you guys since it was $12. Okay, we're now trading at 18. I still like PCG. The only thing is that this thing moves so freaking slow. It's kind of hard to capitalize on short term options. So the best way to do this is just buy shares or take leaps, like close to the money leaps. That's the only thing. It's very hard to capitalize on short term options because of just how slow it moves. But again, this is trending higher, and I really like this. Okay, the last time I really played PCG was during COVID. I'm back again with PCG, and I really like the chart that I just bought shares. Just keep it stress free like that. All right, so talking about that, Con Ed. Con Ed is on a multi-year breakout so far. This thing can get a really nice pop. So far, it's done a bullish retest of the MAs and structural retest here. I like Con Ed for continuation. It's been a very long time since I've traded options on Con Ed, so it's probably another slow mover, but I like it. Maybe a month or two out in terms of expiration, you get something closer to the money and play that way. All right. Same thing with XLU. I recently told you guys to watch for XLU, okay, which is basically the entire utilities ETF. XLU looks great. You can kind of ignore this. XLU looks great. This is also trending high. I think they're probably going to break this all-time high. All right. Yeah, that's pretty much it. Okay. Any other questions, guys? I think we've been doing this for about an hour, probably. Any other questions? 5:39. Yeah, almost an hour and a half. Wow, this is a pretty long stream. Any other questions? You guys finding this helpful? Yes. All right, so I'll keep you guys updated on the portfolio that I'm running. Look, being up 6.5% on a portfolio that's strictly based on shares in 2 weeks is pretty big. Like just doing nothing. So I'll keep you guys posted like with things that I pick up, and then you know, go from there. But that's pretty much it. All right. You guys enjoy your weekend. Again, if you guys like my content, please subscribe, like, share this video. Also, you can scan this QR code right next to me to find all the other links to our other platforms and my Substack, websites, Discord, stuff like that. All right. Enjoy, guys. I need a break from the charts now. I'm going to go shut my computer off, enjoy the weekend, and I'll see you guys on Monday.